Hello everyone, and thanks for watching. Bryan Lebo here with your Las Vegas market update for March. Now, today, we're going to cover all of our typical metrics. We'll check in on the notice of defaults, see what the current inventory looks like, break down this current inventory, and then see how last month's sales stacked up to February of 2013 last year. For the first time, I'm going to take a moment to explain to you where all of the data and statistical analysis numbers actually come from, and why some of the numbers you see in the media may not be reflective of the actual real estate market. Okay, first up are the NODs or Notice of Defaults. This tells us how much potential foreclosure activity will occur down the road. As you can see now on the screen, the NOD levels have been pretty meager since October when new legislation went into effect. At the time of this video, the numbers for the final 2 days of February are not known yet. Since we've averaged about 22 filings a day, I estimate that February should be about 411 filings. This is a large increase from the previous months, but overall, there's just not really much to report here. Okay, next is the current inventory levels. Very surprisingly, since November, we've been consistently seeing a reduction in inventory. Overall, we're down about 8% from our high of about 7,000 back in November. Nothing to ring the alarms about, but it's worth noting since the overall demand is lower as well. Next, we have the breakdown of this inventory. 15% are short sales, and 7% are foreclosures. This leaves about 77% of the current inventory as traditional sales. Although not much, we're seeing a slight increase of traditional sales in the market over the last few months. Now, let's get to what happened last month. Last month, we only sold about 1,750 homes. Now, in full disclosure, because I'm doing this video on the second day of March, some of the end of the month closings still haven't been reported yet by listing agents. Realistically, we'll see about 150 more reported in the next week, which will be added to those February sales. Either way, that would put us at about 1,900 sales for February. Now, to compare that to last February when we had 2,490 sales, this would mean that February sales compared to last year in February was down 24%. Now that's a massive number, guys. You also have to take into account that last February, we literally had half of the available inventory we have today. Let that sink in. We've got twice as much to sell, but yet we're only selling 76% of what we sold last year. So where does this leave us? Inventory is decreasing, but so are sales. The good news for the market is that even though demand is down, supply is actually in check. If inventory were to rise while demand is down, we could be in some serious trouble. Right now, most of the market is holding pretty firm. Prices have plateaued in most of these areas. However, with the demand so low, it's very rare now to find a property with multiple offers on it, especially if it's not the nicest house on the block or priced under $150,000. On the other hand, I've seen several subdivisions that are already selling for about 5 to 8% less than they were a few months ago. Like I warned you many months ago, some of these neighborhoods are being adjusted right now, while others that were more reasonably priced are still holding pretty firm. I'm finding that in newer areas, especially in the north and northwest, they're having some difficulty selling since there's so many new homes that are competing and now giving incentives away. See, there's a glut of inventory up there, and I would expect pricing to continue to decrease as these new home builders continue to lower their prices in the near future. Conversely, I'm seeing many homes in Summerlin sell for absolute top dollar, if they're upgraded accordingly. I think we still have a few months to go before we see major price reductions occur across the board. Okay, now for a segment I'm going to call, Where Did That Number Come From? Now, while I'm a firm believer that numbers don't lie, I'm also keenly aware that numbers are easily manipulated. Today, I'm going to explain where and how I get my data and why you should be skeptical about what you see or read in the media. Okay, first are the notice of default numbers. I receive daily emails from the title company which reflect the most recent day's NOD numbers. This is typically about a couple days behind. I keep track on a spreadsheet, and then I compare the spreadsheet to the monthly totals they send out just to ensure month-to-month accuracy. Next are inventory levels. See, every Wednesday or Thursday, I get a report from the title company, and then I compare that number with the amount that I can pull directly from the MLS. Now, assuming that there's no major discrepancy, I tend to just go with the title company's numbers to remain consistent. Now, every month when I break down the inventory, I simply log on to the MLS on whatever day I do the video and essentially take a snapshot of the market that day. Typically, videos are shot the first week of every month. Now, this is where it really gets interesting. How does everyone measure monthly sales? Well, the predominant leader of this data is a company called SalesTrack. Typically, the numbers you read in the media are provided by this company, SalesTrack. Now, recently, I noticed that their numbers varied tremendously from the numbers that MLS reports. Now, recently, I had the opportunity to meet with Brian Gordon, who is the principal of SalesTrack. When we met, I asked him why there was such a discrepancy between these two numbers. For example, SalesTrack states that existing home sales for December of 2013, a couple months ago, was 3,453. Okay, well, the MLS shows only 2,244 sales of resale homes that same exact month. How could we possibly have a discrepancy of 1,209 homes? The answer is actually simple. When SalesTrack states existing home sales, what they really mean is existing property sales. This includes townhomes and condo sales. Okay, well, right up there, the MLS picked up another 484 condo and townhome sales then. But we're still missing 725 sales. So here's the trick. SalesTrack also includes for sale by owners and auction sales into their mix. Now, while one can argue that these sales should count, you should also need to realize that we're talking about two completely different worlds here. Foreclosure auction sales typically sell for what you would consider wholesale prices. This is where the flippers purchase for cash and then resell on the open market or, MLS market. So in December, 21% of the sales you read about in the media are actually wholesale auction sales. If you're a typical buyer or seller, is this data really relevant to you? Normal buyers don't go to the auction and buy $200,000 homes in cash without title insurance. Most of these homes that sold at auction come right back onto the MLS like 3 weeks later, either as a flip or a bank-owned foreclosure. To me, it's kind of like double dipping and skewing the reflection of the actual market that consumers rely on. For this reason, when I discuss last month's sales, I only go off the MLS sales since this is more indicative of what is occurring in the real market of real estate. Well, that's it for this month, guys. Have a fantastic March, and don't hesitate to contact me directly with any questions or concerns you have about Las Vegas real estate.